Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Quant is holding below a key area of support at around the $106.5 mark, which is now acting as a resistance for us to continue gearing up. And all this is playing out after we saw a break above that key area of resistance. And as we try to have a successful retest of that key area of resistance before we can continue gearing up, you can see that the retest was not a success and we lost that key area of support, and we have continued to see further breakdown. Though at the time of this recording, we are also holding above the 20-day MA here on the 4-hour chart, which is also acting as support for us to continue gearing up. And in case further breakdown continues, then the next key area of support that we need to keep our eyes on is the area at around the $100.3 mark, where we can find support and then get another massive bounce back to the upper side. Quant has also continued to obey the Elliot wave structures, and zooming out to give you my Elliot wave analysis here on the Quant chart, you can see that Quant gave us a bear market low at around the $40.1 mark. Then afterwards, we saw a 5-wave move to the upside, having the wave 5 giving us a high at around the $229 mark, completing the formation of these larger Elliot wave count 1. Then afterwards, we started a breakdown move in the formation of a larger Elliot wave count 2. Minimum target areas highlighted on the charts using this blue target area, which lies between the fib level 0.5 and the fib level 0.78, which is an area that we have almost fully maximized, and there are high chances that the low for this second wave might be in, and Quant might be ready for that massive pump to the upside in the formation of this wave 3. And if by any chance Quant is able to continue gearing up and give us a complete 5-wave structure on the charts, followed by an ABC corrective structure, that will be enough confirmation that the low for this second wave is in, and we have now started an impulsive move to the upside in the formation of these larger Elliot wave count 3. And in that move, I will also be watching for a break above significant highs and giving you minimum target areas for that third wave to the upper side by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. I get a minimum target area for that wave 3 at the fib level 1.618, and that is at around the $397.5 mark, and that is the minimum that we can expect Quant to do in the formation of that wave 3 to the upper side once that impulsive move to the upside starts. I also have another scenario that we have here on the charts that can only play out in case Quant continues to lose significant areas of supports, and in case we continue seeing further breakdown, maybe by any chance we lose the $100.3 mark, which is a key area of support, and maybe at some point we also lose the $97.3 mark, which is another key area of support, then there are high chances that we might see a reset of the low that we have at around the $94.3 mark. And in case such a move plays out, then that will be suggesting that we need to put in place one more leg down in the formation of that wave 2 before we can start our impulsive move to the upside in the formation of that larger Elliot wave count 3. And that will be suggesting that we might see a breakdown move where Quant might get to the $80-point-something range before we can start our impulsive move to the upside in the formation of that wave 3. And if such a possible scenario ever plays out, then I think that would be a perfect entry to get back into Quant, and that is not financial advice, so that we can be able to ride that massive pump to the upside in the formation of that wave 3. So that is an alternative scenario that you also need to have in mind in case we lose significant areas of supports here on the charts. but as long as we are holding above them, we can continue expecting higher prices in the formation of that wave 3, and also continue watching out for a 5 wave move to the upside, followed by an ABC corrective structure and a break above significant highs to confirm to us that the low for the second wave is in. Also taking a look at the indicators here on the RSI, we are trading at around the 57 mark. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I'll be keeping you updated.